Hey Steve, everybody was talking about how the Feds were going to raise interest rates this year. What's going on with that?
Well, we saw all last year we were talking about if they raise rates, they're going to cause huge repercussions to the economy. They can't raise rates because there's too much debt. And that's what happened. First of all, student loan debt crisis. They caused the greatest student loan debt crisis we've ever seen. Betsy DeVos just got on and said, hey, we have a student loan crisis going on right now. We have $1.4 trillion in student debt. Now, because of the skyrocketing rates that they did, which impacted student loans probably the most, we have $166 billion in default student loans right now. Then we have 7 million people that are 90 days more or late on their car payments. Now, this is what really spooked the Fed out. The last quarter of 2018, we saw the greatest destruction of wealth ever seen before, besides the 2008 disaster crash. That's what spooked the Fed out. That's why we're not going to see that. They now know that we have too much debt in the economy. Government, corporate, and personal debt is just too high for them to raise rates. Usually it takes 2 years for the economy to go into recession after the Fed has raised rates. That's what we've seen the last 20 years, last 30 years. Now, look what happened. We saw the repercussions in a few months because there's too much debt.
Yeah, I mean, last November of 2018, also December of 2018, we saw the market have a steep decline. We saw the decline actually hit about 20% in December. It was about 18% of decline from the year previous. January, same thing. And now we're seeing in February, that actually changed a little bit. We saw a 7% decrease from the year before, which is, hey, it's a far cry from 20%, which is a good sign for the economy moving forward, especially real estate here in Las Vegas.
Yeah, the Fed has finally got in tune and realized they can't raise rates. Rates have come down for mortgages. We're at 3.9 today for FHA, so we're back on track a little bit. But the damage the Fed has done is going to be hard to fix. So we're going to see what happens.
All right. Thanks for your time, Steve.